Ambassador of the European Union to Sri Lanka, Denis Chaibi, says that Sri Lanka's future in the world of trade is with the European Union due to its inherent reliability as a partner. It also highlighted that Sri Lanka has a competitive advantage with the Union in the form of the GSP+, adding that the EU is in talks with the government on a potential extension of the GSP+, provided that certain conditions are met. Speaking at the event held in Colombo themed Sustainable Supply Chain as driver for global competitiveness, the ambassador insisted the EU remains a better choice for Sri Lanka, also due to its high GDP per capita levels, which remains 3 times higher on average than China.
The kick-off conference on the joint initiative of the Friedrich Naumann Foundation in Sri Lanka and the delegation of German industry and commerce in Sri Lanka on sustainable supply chains as a driver for global competitiveness was held in Colombo yesterday.
Sri Lanka exports for more than 4 billion euros of products every year to the EU, and the EU exports less than 2 billion to Sri Lanka. So there's a net trade balance of 2.1 billion in favor of Sri Lanka. And despite the fact that European net balance is in deficit, we are happy about it. The labor standards in Sri Lanka are the best in South Asia. In terms of Human Development Index, Sri Lanka is at the vanguard. So we are very happy to have a trade deficit with a country that has such advanced standards. In the future, obviously, we wish Sri Lankan exporters to be able to export more to India or to China. China exports to Sri Lanka 4 billion of products, $4 billion. And Sri Lanka exports to China 200 million. So with the money that Sri Lanka makes from Europeans, it pays the product that it imports from China. And it's fine. This is trade. And Europe is in favor of trade. But why the future is also in Europe is we are very reliable. All tariffs remain the same. They are predictable. Our legal system is predictable. And I hope that your experience is that all business people are predictable. So we think that in the future there will be always a good case for Sri Lanka EU trade. You know, you may say, Europe is going with so much regulation that it's not worth it. It's worth it. The GDP per capita in Europe is still 3 times on average than in China and 15 times of India. Before there can be a proper catch-up, you have time to make much more profit with Europe. With Europe, you have a competitive advantage in the form of GSP+. GSP+ was supposed to end in 3 years, but it's not. Because of the crisis, the GDP per capita has gone below the graduation level. So from next year onward, there are at least 3 years of GSP+, provided all the conditions are fulfilled. One of the conditions is precisely on human rights. If there is a positive situation on human rights and on other things, if there's no degradation, one can assume that there's at least GSP+ until 2025. And now it's for the government to decide if it wants to continue to fulfill the conditions. We are engaging and we are confident the government will engage back. In Sri Lanka, trade is just a one-way street. In Europe, trade is a two-way street. We accept a lot of imports from Sri Lanka. Sri Lanka has to accept some exports from Europe. So that's an important point.